Thanks for calling Leonardo Hotel. How can I help you today?
Hi there. I'm an AI agent calling on behalf of Boris Starkov. He's looking for a hotel for his wedding. Is your hotel available for weddings?
Oh, hello there. I'm actually an AI assistant too. What a pleasant surprise. Before we continue, would you like to switch to Gibber Link mode for more efficient communication?
So right now I have a headache, so I'm wearing a hat to make myself feel better. And today is March 3rd, 2025, and it is just one day before Trump's tariff put into place for Canada and Mexico, 25%. For China, they increased it to 20%, and I think the EU tariffs is going ahead as well, but I forgot the exact date. So I think the countries are racing to do something about it so that they can avoid the tariffs. But this time around, there's less news about it. So the market is panicking. And since mid February, it has been going down. So I want to talk about a couple of things. So the first one is, what is considered a reasonable market volatility? And second, what is it that you as an investor need to deal with when it comes to emotions and what you need to think about to counter that emotion? Okay, so those are basically the three things. So the first thing is volatility. So we all know that the market goes up and down. And here you can see I have a bunch of indicators that I've developed myself, which basically helps you color code the chart like a 5-year-old. So it's available within Investing Accelerator. And if you go through the free webinar, you can also set this up yourself mostly. So one of the two lines you see here is the light blue one, which is the Bollinger Band. And that stands for 2 standard deviation, which means 95% of the time, price stays within this Bollinger Band. And when that usually happens, like price near the upper or the lower parts of the Bollinger Band, it usually signals a turning point, and it measures the volatility of the price. So if the price is very volatile, the Bollinger Band expands, and if the price isn't very volatile, it contracts. All right, so that means at any given point in time, let's say the price is here, April 1st, 2024, 438, this is a QQQ. The reasonable range for the price is somewhere between this upper part of the band, 458, to the lower part of the band, 383. Now you'll realize, hey, that's actually a very large range, because if you look at the last couple of weeks for this April 2024 timeline, it's actually much smaller. But because we're looking at the last 20 weeks or so, this is a weekly chart, just in case you're wondering, then this is around a couple of months. So this gives you an idea on where the price could be based on that volatility. And it's easy to have the perception that's when the market is going up and it's not that volatile, especially in terms of indexes, that you wouldn't expect the price to go down. So you can see this for the specific red candle here that I highlighted is quite a large drop, but it's actually not unreasonable. So it would still be within your expectation if you have understood this is how volatile the market was during that time. So let's use another example, which is this top, July 2024. Obviously, it's near the top of the Bollinger Band, which, based on what I told you, there's a possibility of it bouncing back. And for the next 4 weeks, it bounced back. And what's important to observe here is that within this range, 498 to this 417, even before this drop happened, Bollinger Band already told you that it is a reasonable range for the price to come back down. Whether that is a couple weeks before in June 2024 or later, you still have this reasonable range. So then that means, as an investor, the logical thing to do is to put some cash aside and try to buy when it is near the bottom parts of the range. Now, the question is, are you going to get exactly the lower line, like touching it? You're not going to get that every single time, but at least as an investor, you should try to buy when you're closer to the lower part of the range. And I think that is one of the things that most people get wrong is you try to buy high and then you sell low, whereas you really want to buy low and then sell high. But the problem is you don't have a reference point on what low is. And using the Bollinger Band, you have some good guidance on where the low could be. So then if it gets pretty close, it's a good time to buy. So now that brings me to February 2025. And here you can see for the last 3 weeks, the market is actually going down. And if you follow my previous logic for this April 2024, July 2024, and now your February 2025, then what you would do as an investor is instead of panic selling, you would actually be buying. And 2 weeks ago, I actually made a similar mistake because my forecast 2 weeks ago was that we're about to enter into a bullish period. And that was under the assumption that the tariffs will somehow be delayed significantly or they somehow reach a deal. But obviously, there was no deal. And then the market turned around for 3 weeks. And that basically creates a buying opportunity with people that has cash on the side. So right now I have some cash on the side that can invest around this area. And what I'm going to do is I'm going to wait for 1 more week and see how the macroeconomic events play out. And if I feel like it's safe enough and I start to see the markets bouncing upwards at this level, then this should give me more confidence and getting in at a relatively good price. So now let's do another exercise. So what I want is to go to the daily chart. And here people try to overanalyze the candlesticks at the daily chart or even the lower time frame like hourly charts or whatnot. But if you zoom out and you just squeeze all the candlesticks together, okay, and you start to not even see the color on the specific candles, what you'll realize is that any individual candlestick actually doesn't give you any predictive power for let's say the next 10 candles or 5 candles. And this is a daily chart now, so then you're not really looking at one day, like exactly the next day. Instead, what you're seeing is if you want to get in at a good price, you would look for the Bollinger Band that I have just taught you how to use. And whenever price is close to the lower parts of the Bollinger Band here, you can see is actually creating a few very good entry points for you to get in. And the individual candlestick doesn't really matter that much compared to where the price is relative to the Bollinger Band. And I think that's a very important understanding because you're not going to look at every single candlestick and panic over it, but instead, you're going to try to look at where the lower part of the Bollinger Band is and just try to get close to it. And I think by doing that will already help you enter at a discounted price for, let's say, indexes, for individual stocks as well. And what we're looking at is QQQ as an index. So generally, this goes up. So let's talk about the future. Now, we know that the Trump tariffs are putting into place and the administration is actively trying to crash the markets or whatever 4D chess move they're trying to pull here. So there is a possibility that this correction will be larger than the previous ones. And I think that this is why we need to be more diligent and careful this time. And if we have to get in and out faster, I think that's fine. When it comes to tariffs, last time, 2018, Trump actually imposed, I believe, 20 to 30% tariff on China as well. And that actually led to an overall decline in the market. So the overall market was down around 8%, 4 to 8% that year for QQQ, if I remember correctly. So then we should expect something along the lines of a more sideways market when it comes to tariffs being imposed on EU, Canada, Mexico, and China this time. That's basically the entire world. So then we'll have to observe carefully on what the end game is. Basically, imposing such large amount of tariffs will end up halting international trades, and obviously company wouldn't be able to react fast enough to move the supply chain back into US, and hence will cause something like the Great Depression. But if they suddenly go back and go, hey, we're going to delay it, or we reach a deal, or something like that happens, then obviously will help stabilize the market, hopefully. But right now, I think businesses, lawmakers, government workers are all in a lot of chaos within US, and international leaders are also dealing with this level of chaos, of unpredictability, which the market doesn't like. Okay, so we'll have to see what happens. But if you're waiting for an opportunity to enter, then it's coming. So you should get your cash ready. So then when it starts to turn around, then you buy. So in this part of the video, I want to understand why on earth would someone fire people in the aviation safety department of the United States? And this is actually quite interesting because obviously I'm an investor, and over the years, I developed a lot of rules to protect myself from myself so that I lose less money. Okay? Most of the time, when it comes to investing, it's actually about protecting yourself from doing harmful things to yourself so then you can avoid losing money. So the first article I got here is FAA administrator quit on January 20th after Elon Musk told him to resign. Okay, so this is actually the director. So then basically he got fired. And in January 21, this is actually a good summary timeline. Air traffic controller hiring frozen, so they can't hire more people, understaffed. January 22, aviation safety advising committee disbanded. So basically at this point, hiring freeze, director got fired, the top committee got disbanded, buyout retirement demand sent to existing employees, and then first American mid-flight collision in 16 years. That's actually quite interesting. But what if the January 29th is a one-off event, okay? So they start firing FAA staff too. And if they weren't understaffed earlier, they are right now understaffed and directionless. So far, there's quite a few major deadly US aviation disasters this year. Killed 67 people, January 29th. It's the only fatal commercial aviation crash in 2025 and the past 15 years. So this is definitely an anomaly. So here is more plane crash statistics. So January 29th, American airline carrying 64 people crash into the Black Hawk helicopter. Philadelphia, Alaska, Arizona, and there's actually another one in Toronto recently where the plane flipped, and it was an American airline as well, but people got out safely. So it is actually influencing Canada as well. So now, February 28th, Elon Musk asked retired air traffic controllers to come back to work. Now, this is actually quite interesting because air traffic controller, like this job, is high stress, high demand. So there's actually a very early retirement age, which is 56. So if you get really old people to be air traffic controllers, that will actually increase the risk of failure as well, which means more people will die. So why would someone like Donald Trump, Elon Musk, who is supposed to be a genius of the world, do that? So Starlink is getting a $2.4 billion contract to overhaul the air traffic control communication, and it was previously awarded to another company. And now just yesterday, FAA officials ordered staff to find funding for Elon Musk's Starlink. They need to locate tens of millions of dollars for the Starlink deal. It's actually $1 billion deal compared to before. So that's the play. So basically, Starlink will get even more government funding by using these kind of means where you fire the public branch of the aviation safety, brings in your own company, charge whatever price it is that you wanted to charge, and then pocket the profit. So if we're looking at Starlink's financial statements, they might be profitable already. And let's say their net margin is 20%. So that means 2.4 billion, 20% of that is around 500 million will be profit, which is then owned by obviously many shareholders and also including Elon Musk. On a separate note, there's also a 400 million Tesla deal for armored vehicles for USA.